optimism over the medium term so that confidence doesn't collapse completely, while sort of, trashing the short term and kind of saying we're in trouble, so the market doesn't get the idea that they're even dreaming about withdrawing stimulus and just waiting until vaccination conditions improve.
I know many people find this super tedious, so we'll move on from it, Alessio, and get to the market. Euro dollar 120.26. Deutsche Bank was on with my colleague friend Francine Lacroix earlier this morning, talking up Q2 as Europe's quarter. Q1 was America's quarter, Q2 will be Europe's quarter. Do you agree with that, Alessio?
I absolutely agree with that. If you look at we look at the data and we see the very strong potential for an imminent inventory cycle in the Eurozone. What we mean by that is because of the situation with demand and the lockdowns, we see inventories are running really low. Demand expectations on the side of businesses across services and manufacturing are improving, and that typically leads to a very healthy bounce in production. Production expectations are increasing, and those are the typical short-term cyclical dynamics in the inventory cycle that prove very valuable for markets. We always tend to focus on the more secular, structural, or longer-term multi-year trends, but ultimately most things in markets tend to be really driven by the cyclical forces. So we think Q2 has a very strong potential, and Q3 for that matter, to surprise. And when you look at the relative performance between equities in the Eurozone and the US, despite the terrible narrative that we have had for the Eurozone, they are right on par with each other on the same currency basis for the last 6 months and on a year-to-date basis. So the market is getting a hold of that theme.
Steve, let's push this through the FX market. Goldman, Deutsche Bank looking for something in and around 125 in a medium term. What are you looking for, Steve?
Well, we're quite similar in that we expect that we're fairly close to the trough in the euro, and that it's a story of dollar weakness largely more than euro strength. But the market is shifting from, say, extraordinary Euro pessimism or European pessimism to standard European pessimism, and that's an improvement, and it's helping the euro.
Bad gets less bad seems to be the theme out of Europe, Steve, and sometimes it's not a laughing matter given what's happened with that pandemic. It certainly isn't. Steve Englander, Alessio De Longis staying close. We'll get you to the United States in just a moment. Your equity market down about 0.2% on the S&P. With your movers from the market desk, here's Abby.
John, we have one pocket of strength, clear strength here right on the open, shortly after the open. These green power movers are popping higher. This, of course, as it becomes very clear that the Biden administration is committed to helping the environment and addressing climate change, pledging to cut greenhouse emissions by half by 2030. So we have Plug Power, Fuel Cell, and Sunrun all higher. Nikola had been sharply higher earlier, in addition on the news that they have signed a deal for 2 hydrogen filling stations. Turning to some of the best and worst stocks for the S&P 500, AT&T is the best boost for the S&P 500. They put up a strong quarter, beating profit estimates. They also signed 2.7 million subscribers for HBO and HBO Max. Now, really interesting, John, because I know that you've really been weighing in on the inflation conversation. D.R. Horton, one of the largest home builders, down 2.3%. Earlier higher, they beat, they boosted. Orders are up 35%, but they're talking about peak costs, having to raise prices because of cost. Perhaps that's why the stock's down. Equifax put up a strong quarter, beating and boosting. And Whirlpool also weighing in on inflation costs, up 3.8%, a strong quarter. They also raised the forecast. They say peak costs in the third quarter of this year. Let's see whether or not that happens, John.
We'll talk about that company in just a moment, Abby, on the price hike side of things, along with Procter & Gamble, Kimberly-Clark, Coca-Cola. There's a theme emerging pretty quickly in 2021 in Q1 earnings season. Coming up on the program, another company raising prices to offset higher commodity costs. That conversation up next with Invesco's Alessio De Longis and Steve Englander of Standard Chartered. From New York City this morning, good morning to you all. This is Bloomberg.
generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Our focus is odor detection, and this is because no matter how you're bound, what container you're in, you're still producing and releasing odors, and we're kind of building off of wildlife detection dogs.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Now with the vaccination, starting to roll out successfully, you're going to see that we're going to move into more of a recovery phase. But what we don't know yet, and what consumers don't know either, is that what type of framework will be in place and what type of restrictions will be in place, and what will those restrictions mean in terms of complexities and cost for the consumer.
EasyJet CEO Johan Lundgren highlighting uncertainties facing summer travel. Investors watching the airlines for clues on the recovery. American providing the latest insight, with the CEO, Doug Parker, saying, quote, "We're a long way from where we need to be. This crisis is far from over, but there's no doubt the pace of the recovery is accelerating." Let's bring in the Bloomberg team. Kelly Lyons, Michael McKee. Morning, Kaylee.
Morning, John. Well, the airline earnings we got today, certainly more positive overall than the likes we got from Delta and United over the last week. One positive being cash burn is improving. American down to just $27 million per day in the first quarter. That was down sequentially, and actually in March, they're only burning $4 million per day. That actually would have been cash positive if you take out the debt payments the company is having to make. On the other hand, Southwest actually did go cash positive in March. It did burn $13 million a day in the quarter overall, but the airline says it's hopeful the cash burn will stop by June. That said, they both still lost money, no surprise. The losses were narrower, though, than analysts anticipated, so that is a positive, and it still brings their total losses since the first quarter of 2020 to $4 billion for Southwest and $10 billion for American. If you ask the International Air Transport Association, John, more losses are on the way. Just yesterday, IATA raising its projections for global airline losses this year to $48 billion. They also said about 2 billion fewer customers will fly this year relative to 2019. American and Southwest, though, both sounding a bit more optimistic. Southwest adding summer flights to almost 2019 levels. The company's CEO says bookings are steadily improving. The worst is behind them. American echoing that, saying the pace of the recovery is accelerating. But as you said, John, the CEO, Doug Parker, saying this crisis is still far from over. So while there is hope, these carriers are still facing some major headwinds. John.
Very real on the ground domestically, better, or in the sky for that matter. internationally tough. Kaylee, thank you. We've been pouring through earnings season so far, and there's a pretty clear trend emerging. Prices heading higher. There's a growing list of companies ready to pass on higher costs as producers struggle with shortfalls. You're seeing it from Coca-Cola, Kimberly-Clark, Procter & Gamble, Whirlpool in the last 24 hours. Mike McKee joins us now for more. Mike, how key is this commentary for you, just in terms of the outlook?
Well, it's not telling us anything new, John, and that's the thing. This is all expected, and the problems are pretty easy to see. They're obvious out there right now. You take a look at the charts, and it'll show you that there is a stimulated economy that is recovering quickly, struggling to find things to buy. Industrial commodities, crude oil shooting up. Freight costs shooting up, supplier backlogs consequently shooting up, and they got to pay for it somehow. Leaves you with a page full of superlatives, especially for things that make things. Whirlpool's got to worry about steel mill prices up the most since 1939. Hardwood lumber is up the most since 1947. That's why you're seeing trouble with the home builders. All that has people warning about inflation, particularly the politicians down in Washington. On Wall Street, though, the debate is a little more subtle. For one thing, we're looking at base effects. We all know that. For another, the speed of demand should slow, allowing time for suppliers to catch up. And that's probably why inflation expectations are still contained. 5-year break-evens incorporate the jump in prices, but when you look at 10 years, they come down. Inflation not expected to stick around, and you get the same story from 5-year forwards. The bet is with the Fed right now that these are transitory trends and that the central bank can tap the brakes. Now, not everyone agrees. I said the debate is kind of subtle, except for our old friend Larry Summers, who told the Council on Foreign Relations yesterday the Fed's new policy is still a problem, their new reaction function framework. Quote, the Fed's job had been to take away the punch bowl before the party gets out of hand. What they're saying now is, we're not going to do anything until there are a bunch of drunk people staggering around.
Or as someone pushed back, Mike, this time around they're letting the servers attend the party for once.
Yes.
I actually thought that was a great pushback, and I saw that out on Twitter, and forgive me for not remembering who said it. Certainly not my words, but I thought it was an interesting comeback. This time the servers get to attend the party.
Exactly. Well, drinks will be served 1 week from today, John, with the PCE index coming out for March. That's the Fed's favorite inflation indicator. We'll see if it follows the CPI higher.
I think we all need a drink after that news conference with the ECB a little bit early this morning. We'll leave that one right there. Mike, good to see you. Great to catch up. There is a conversation that economists have. There is a conversation for markets and market participants. You can take the very same debate and then we'll see things very differently. Blackstone's Jonathan Gray weighing in on rising costs, recommending investors stay cautious amid inflationary pressures.
Steel and lumber prices are up double digits. Used cars are up 25% year on year. We're beginning to see pressure on wages in areas like hotels and theme parks. Hiring workers getting harder. And so I think that's something all investors need to take into account.
All investors need to take it into account. Let's bring in Invesco's Alessio De Longis and Steve Englander of Standard Chartered. Alessio, how are you taking that into account?
Frankly, I think Mike did a terrific job in synthesizing what the issues are, both on the real economy side as well as market participants. We are in line with how Mike described it. We see already this inflationary momentum from an expectation standpoint already rolling over. It really comes down largely to cyclical forces and base effects. And we expect that in the second half of the year, this inflation momentum and inflation expectations will actually continue to roll over. When you look at the real data, the base effects refer to the unwind of the shocking price drops that we saw last year, some rebasement, some recalculation in the weights, not only in the US, but also globally, that are affecting the headline numbers. But once we have gone out of this cyclical makeup, cyclical rebound for the loss of the cyclical momentum from last year, we expect the inflation dynamics to level off. Now, with respect to the amount of liquidity and monetary creation, we have seen and we will continue to see that inflation manifest itself in asset price inflation rather than goods inflation.
Steve, I think it's really difficult for FX right now, to build on the words of Alessio, just to think about the different reaction functions we have through a different set of central banks. Canada responding their own way, the United States pledging not to respond at all, Europe will do its thing. How do you approach FX with that in mind, a set of very inconsistent reaction functions through G10 central banks?
Look, I think FX is playing out in a way that's understandable. We're seeing imports spike into the U.S., like record amounts of containers landing on West Coast ports, possibility that the trade deficit will go up by 5 to 10 billion, which is enormous in the coming months. At the same time, the Fed is telling you that they're not going to do much. So, we're used to 30 or 40 years in which the economy takes small steps and the central bank takes, bigger steps. Now we're having the economy take big steps and the central bank telling you they'll take small or no steps. That plays out as dollar positive. We're very optimistic on CAD because the Bank of Canada seems eager, willing to normalize as soon as possible. And that's not the message that that we're getting from any of the other major central banks. But it's a very dollar negative view, over the medium term.
Steve, just a final word on the US dollar. We've got a deficit to finance. Yields can either adjust or foreign exchange can adjust. That seems to be the view of a lot of people, just looking at this in very simple terms. Is that how you'd approach that particular debate too?
Pretty much. We're putting a lot of dollars into the world. We know central banks are selling dollars regularly. Our deficit is going up regularly. The question is our rate of return attractive enough to finance all that? And if it's not high enough, and the Fed has some leverage, at least over the short term on those rates of return, markets compensate themselves by weakening the dollar. And that's the way we expect it to work out.
Steve, good to catch up. Steve Englander, on the latest in this market from Standard Chartered. Invesco's Alessio De Longis following the ECB. Great to catch up, guys. Let's get some of the sector price action. A little bit of breaking news as well. Here's Abby.
Breaking news indeed, John. We do have a Bloomberg exclusive here. Aramco is said to review upstream assets for potential stake sales. The energy giant has spoken with advisors who evaluate options, and asset sales could raise billions of dollars for the state oil firm. Of course, that is, again, Aramco. Turning now to the sector action, we're looking at something unusual, John. This week, we are looking at the first down week, potentially in 5 weeks. So a little bit of a bearish sector tone fitting to the week. More sectors are down than not. Energy, sticking with the energy complex, down 1.2%. Materials, financials. So you have a lot of those cyclical sectors lower. And on the week, if we take a look at what's happening over the last 5 days, so it also includes last Friday's gains. But even so, we have some important sectors on the decline, including energy, tech, communication services, and financials. So you have a blend of both tech and the mega cap stocks pulling, John. And you also have some of those cyclical sectors as well. Not so great for the bulls.
Abby, thank you. Thank you very much. Coming up, the market moving events you need to be watching. That'll be next in our trading diary from New York. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Global markets never sleep, so stay connected. with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lines in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
"26 minutes into the session. Equities down a third of 1% on the S&P 500. Let's get you the trading diary. What you need to be watching this week. President Biden hosting a virtual climate summit later in the day. On Friday, we get US and European PMIs. Earnings from Honeywell and American Express, and the CDC meeting to discuss the J&J vaccine. From New York, this was the countdown to the open. Continue the conversation on Twitter at Ferro TV. This is Bloomberg.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water. It's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things of life happens. I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.